Today, I am going to be talking with you about an income statement. An income statement is one of the three primary financial statements used to assess a company's performance and financial position. So, if you are doing anything with financial statements, whether you are looking, at a publicly traded company to invest in, or looking at the health of your own company, an income statement is a very, very, very important thing to take a look at. What it does is it summarizes the revenues and expenses generated by the company over the reporting period. So whether that's a month or a quarter or a week or a year. Um, we're going to look at several examples later on in this presentation that are pretty basic, and I would definitely encourage you, if you're interested in income statements, to you know go look at a Coca-Cola income statement, or just another household known um, brand name of a publicly traded company. So Coca-Cola, Apple, Google, Microsoft. Just look at their income statement. Look at the huge numbers that are represented there, the billions. Look at all the different categories and subcategories that they have listed. And then, look at the year over year change. See if it would be something that, after looking at that statement, you should or would consider investing in. I'm not saying you should do it, make an investment decision based on solely on an income statement, but it is, a good basis for at least initiating that conversation. So some other names for the income statement are profit and loss statement, statement of earnings, and then a statement of operations or statement of income. So, it goes by a lot of names. I think these names vary a lot by industry or sector. But what's important is that the actual function of the income statement doesn't change. No matter what you call it, it still summarizes the revenues and expenses generated by the company. So you can call it whatever you want to, but the purpose is still the same. And this is really the equation. You'll see that the first section of an income statement is that all the revenues are listed, and then you'll see the expenses listed by category, and then you get to income. And I mean, this is what drives a business forward. This is where, whether it is a service business or whether it is a product, where you're selling a product, um, every business has revenue, every business has expenses, whether um, fixed, whether you're looking at expenses for cost of goods or what have you. I mean, every business has expenses. I would love to see a business that doesn't have expenses. And when you take what you earn minus what you spend, you're left with net income. Um, so this is a very, very basic income statement um, for a made-up company. But in this, like I said, in the first section, you'll have your revenues. So they made $100,000 in sales revenue. They made $5,000 in interest revenue. And then they sold some assets, and then the gain on those assets was $3,000 over their cost base, what they had in it. So for this period, they made $108,000. You see the fifth line down, total revenue and gains. So then on to the expenses. So this looks like it says sample products company, but they're selling products. So your cost of goods sold was $75,000. Commissions expense $5,000. Office supplies $3,500. Office equipment $2,500. Advertising $2,000. Interest expense $500. And then you can see that apparently they got sued. So a loss from a lawsuit was $1,500. So their total expenses and losses were $90,000. And when you take the 108 and subtract the 90, you get $18,000. So when obviously, if you're looking at a real income statement, you're going to know what company it's for. But for this one, let's take a look at what we can take away from it. So obviously they're in sales. They're selling a product because it's Sample Product Co. and because they have a cost of goods sold. You can also tell that their salespeople work on at least partial commission, because $5,000 from this period went to commission. Um, on a on $100,000 in sales, they only spent $2,000 to advertise, which is it's great. Whether that was traditional advertising or internet advertising, I think it's always good to look at the ratio of advertising to sales. Um, I would be interested to know what assets they sold for $3,000 and why they chose to do that. Why they are not sold for $3,000, but for a gain of $3,000. Um, and then what did they make? Interest on? You have interest revenue and interest expense. So just a little bit more of what's going on here. So this is one of the three key financial statement or financial documents that you look at when you're examining a company. So as you dig into the other two, you can probably shed some light on what those interest expense and revenues are. So let's take a look at just some key calculations in an income statement. So operating income is gross income minus operating expenses and depreciation added together. Okay, earnings before interest and taxes. If you spend time with individuals that are thinking about investing in a company, you're going to hear a lot about EBIT or EBITDA, which has a few other characteristics in it. But so this is revenue minus operating expenses. All right. Net income, as we've seen earlier, is basically income minus all of your expenses, including depreciation, interest, and tax liabilities. And then cash flow, net income plus depreciation plus or minus other charges to income. So cash flow, how much cash is flowing through this company in a month, a year, a quarter? I mean, how much money is coming in? And that, if you have a lot, I mean, if you're Apple, let's say you're Apple, could Apple survive if they had a really negative cash flow for a quarter or even for a year? I mean, I don't know how many billions they have set in the bank, but I mean, if they just, if there was a stop sale, a massive recall like, Samsung has right now, if there was a massive recall, a stop sale on every product that Apple manufactured, I mean, their cash flow would essentially dry up. I mean, they would have some from their other investments and other sources of income, but I mean, their whatever 100 billion would shrink to 3 billion for a quarter. I mean, that's not sustainable. That's not sustainable for any company, not even Apple, which is one of the most cash-rich companies in the world. So as you take a look at this, and as you if you choose to dive into this topic deeper, I really challenge you to look carefully at what the numbers say, and then ask yourself why. It's great that a company sold $100,000 worth of products, but in a period. But how many did they sell the period before? How many did they sell the period after? How many did they sell in that same period the year before? What was the prediction for that company to sell versus how much did they sell? As you start to ask yourselves those types of questions, you really shed some light on actually what's going on within a company. You have to put on your detective hat, pull out your magnifying glass, and actually look and see what specifically is going on, and is it good or is it bad? I mean, ask yourself whether it's your company, whether you're choosing to invest in a company, or whether you're just interested in this topic. What's going on and why? And then I included a link here. If you're interested in learning more Investopedia is a great, great resource for all things investment related, or really, I mean, just period. But this is a study guide for the Series 65 exam. But this is where I got the key ratios, and really, again, great resource if you're interested in learning more. So that's all I have for you today. If you have any questions, please feel free to leave some comments on the video or on Blackboard, and I